Welcome back. There's markets which, of course, are I don't think very much different from when we started. About 22 odd points is what you have, 24,300, just under 24,300. We started at about 24,300 in the morning. Virat Devanji is with us, National Head Consumer Banking at Federal Bank, and Sachdeva is Vice President and Co-Group Head Financial Sector Ratings at ICRA. Gentlemen, great to have both of you here. Thank you very much for joining us. You know, a bunch of things as far as the the financial services space is concerned. But let's just start with this entire FCNRB number. And Mr. Devanji, if I can start by asking you, what is as the last number that you have in terms of what Federal Bank has taken in? Can you share that with us?
Look, as we have always said, we would maintain our fair share of our FCNR deposit business that we are in. So I think still 5 more days to go. A lot of hectic activities happening, but we are reasonably confident to maintain our existing market share when it comes to FCNRB's business is concerned.
No, you wouldn't have the number?
Look, it is moving. Okay,
what's the last number?
No, which was closer to a billion.
Okay, that number we had. I think we spoke after the first quarter numbers, and I think but that number would have moved on since then, I thought.
No, look, it is. I means unless and until the deal is done, you can't really quote. It's not the bird in the bag. Okay, so the closeout and with suddenly this date moving forward from 30th September to 31st, some of those calculations we had to really rework and get the money moving and so on and so forth. So from that point of view, I think the last 5 days are going to be pretty hectic for us at Federal Bank.
Sachin, do you think we hit $100 billion cumulatively for the industry by the end of 31st August?
Yeah. So that's a pertinent question, that what actual number we will end by August 31. Now everybody is talking about the same. Now initially when this scheme was launched, this scheme got opened, even our estimates stood at say around 60, 70 odd billion kind of a number for say FCNRB part only. But looking at the current trend and still almost a week or say 5 days more to go, I think the number is going to touch very high. Although whether that reaches 100 billion or not remains to be seen. But definitely it will be a much closer number to that. Even if it doesn't touch 100, but it could reach very close to that.
Okay, so that's on FCNRB. What's the overall assessment, Sachin, of the banking industry? Because we have seen a similar pickup in the credit growth. That's a positive. But generally for the industry, profit growth is not picked up. So the street is waiting to see when that credit growth translates into higher profitability. Many banks reported NIM contraction. What is your own assessment of profitability increasing from here for banks?
So from a profitability perspective, I would put it in two different perspectives. One perspective is whether we are looking at operating aspects or the net one. The net one definitely got impacted because of the very significant yield movement during the last few months, which we have seen. A significant spike in the March, following continuing high towards April and May, then coming down slightly in June. So apart from that MTM impact on the net profitability, if I look at my operating profitability, the impact is little bit less because NIM contraction remains there, but other income is rising. And OPEX, almost all the banks are controlling to that extent. So variation in operating profitability is not that high as we are seeing at the net level. However, having said that, even at these numbers, I would say as a credit analyst, when I look at these numbers for the banking industry's profitability as a whole, these looks fairly comfortable per se because you are comfortably reaching double-digit ROE and the kind of growth we are estimating 13 to 15% kind of range. So effectively that remains sufficient there to meet the growth requirements. The only challenge which in ICRA's view we face is the deposit growth. Now this quarter we will have the FCNRB deposits, but what after that? The domestic deposit raising, that still remains challenge because you have to probably raise rates to attract more deposits to your portfolio. So that is the key area which we need to watch out, apart from what everybody is talking about, the West Asia impact on MSMEs and all that. That obviously there has been comforting factor like ECLGS and all that. So asset quality has not played out that much. So those areas remain monitorable, but the key thing which as an analyst I would be looking at would be what happens to my domestic deposit growth after this FCNR window closes.
Got that. Just talk to us a little bit about, Mr. Devanji, on your experience. I mean, how is Q2 panning out so far? Which segments are doing well? This is, of course, also in many parts of the country, you're entering that festive period. So give us a sense on the consumer side.
Look, if you really ask me, if I have to sum it up, the first quarter of in the banking, I can only say that the banking system is healthy enough to absorb low margin. Okay, so I think the margins will be, and as Sachin said, deposit mobilization will be key. At least maybe this quarter the banks will sail through because of FCNR. But the other thing which banks will have to keep in mind that the profits have to come beyond the NIM contributing things which are, say, a fee income, cross-sell, operating efficiency and all those things. So from that point of view, I think those are the things which the banks will focus in the second quarter in order to maintain their NIM growth. If you're talking about the specific sectors that you're looking at, I think gold is shining like crazy at this stage, and I think that's where the demand is. And with this festive season just beginning now, I think the demand, the utilization on the credit cards and the personal loans also you will find growing. As far as the SME is concerned, I think there is a demand. There are people approaching for the loan. They get the loan sanctioned, but their withdrawal is slightly on the lower side. So that's the way I could sum it up on the retail as far as the demand on the various sectors is concerned.
Got that. Mr. Devanji, you mentioned gold, right? It's probably the brightest star across all segments, across all banks, all and NBFCs actually. So it's a point which keeps coming up as whether, I mean, when you look at that segment, are we at the cusp of a kind of a secular kind of run which we've seen for the last 3, 4, 5 years, or is the best behind as everyone with a lending book now is in it? I mean, every second week we hear a new player coming in, which eventually should compress yields. So could you give us a sense what's happening there?
Yeah, look, I think the bigger thing is that the gold loan business is doing well not because of the gold rates are going up. The way in which I look at it is something bigger that is happening across the country, which is the formalization of credit against India's largest underutilized financial asset. So that's the way I look at it. I think the demand for gold loan will continue because the sectors which were initially reluctant, they are willing to take the gold loan. And another thing that you might see is gold loan is actually replacing the unsecured PL. So the financial sector, banks and NBFCs are actually happy that now you're giving something which is more secured. The ease of getting the loan sanctioned is also quite easy. And from all that point of view, the availability, now NBFCs make the gold loan available in every nook and corner in the upcountry market. So from that perspective, I think it's a win-win for the customer and for banks and NBFCs. So I personally...
Is it helping, I mean, you said it's replacing unsecured unsecured credit in that sense, right?
Yeah.
Is it also possible that because it is, as you said, so widely available and it's the ease of getting these loans, right?
Yeah.
If there is stress in the unsecured segment, is it kind of helping paper over some of that? I mean, at the end of the day, I mean, repayment is coming up and you have household gold and you kind of sort of, put that and then you repay this off. I'm not saying it's right or wrong, but do you think that kind of thing is also happening?
Unlikely because at this stage, the stress within the PL portfolio is not there. What I was referring to is the growth in the PL book, okay, is subsided. So from that point of view, I don't think what you are hinting at is currently happening. But we as bankers will have to remain a little vigilant to ensure that it is not actually happening to take a gold loan to pay off the personal loan. At this stage, I don't think that is happening. Yeah.
Okay. Got that. We'll leave it there. Thank you very much, both of you, for joining us. It's a pleasure. Appreciate your time here on CNBC TV18, and thank you very much for joining us. Okay, we'll sort of wrap things up here. It's a pretty flat day. The Nifty is up about 20, 30 points. The last we looked at it, 30 points basically. We started with Vishal Megamart being up 10%. I think it's holding up with that 10% pop even now. But there are a few more names which are looking up as well. It's a wrap on this edition of Bazaar. Thank you very much for staying with us. Chartbusters will pick up the action in just a bit from now.